Market has seen a strong pullback in the month of April. Nifty from the low of 7,500, it tested nearly 9,800. From 9,800 onwards, we have seen some correction. So in the entire fall, almost 50% has been retraced to the level of 9,800. It's a typical textbook example of technical pullback, and we expect Nifty may find it tough to go above 10,000 levels. Similarly, on the bottom side, we feel the previous low of 7,500 unlikely to be broken in near term. So the lockdown has been extended for another 2 weeks. That means we are going to see more pain in our economy. And global markets, if you see, US has done relatively well, and Nasdaq in particular, it has come into positive territory into year to date gain. So overall, global markets are moving in tandem. On crude oil prices, it has been extremely volatile. Huge volatility is there in crude oil prices, and some of the May contract, it has entered into a negative territory also. Historically, it has never gone like that. So first time we have seen crude oil going into negative territory, where huge money has been lost by some of the traders. And in our markets, we are awaiting for the stimulus package, and it seems that a huge stimulus package is unlikely to come in near term. So overall, if you see in the month of April and May, between last meeting and this meeting, if you see, Nifty has gone up around 1.5%, gained around 1%. This is after Nifty touching 9,800 level, it has corrected to 9,250 level. So overall, we have seen around 1.5% gain in Nifty and Sensex. Mid caps around 1.8% and small caps around 3%. So overall, it's a better market when compared to the month of March in the last 1 month. So government has extended lockdown for further 2 weeks. So initially it is the third phase of lockdown, which means that we are going to see more pain in our economy. So the first phase, which started from March 25th, it was for 21 days. The second phase was for 19 days. It extended by another 19 days in the second phase, and in the third phase it was extended by 14 days. So overall, the entire lockdown, if you see, means it is almost 54 days of lockdown in our countries, almost a 2 quarter of lockdown, which will harm our economy very badly. And in the third phase, some exemptions has been given. So the overall, the entire country has been divided into 3 zones: orange zone, green zone and red zone, based upon the number of COVID patients. And some relaxation has been given to orange zones. Green zones almost entirely it has been relaxed, and red zones there has been a huge lockdown is there. So overall, if you see, the most area which are under red zone, if you take, means it is mainly the industrialized states like Maharashtra, Gujarat and Tamil Nadu, where the number of cases are very high. Majority of the red zones are there in this area, which means the economic activity has been affected, and it will continue to get affected in coming days also, because these are industrialized states and majority of output comes from these states. The strict following of the lockdown will affect these states to restart the economy. And some of the relaxed zones like orange and green, some economy activity has been slowly coming up, but we still feel it will take another 2 to 3 months to get to the normalcy of the economy. And if you see the number of cases, if you see globally, the number of cases, if you see that it has flattened, it has almost flattened, the curve has been flattened, but still we are not seeing any signs of tapering down. So that is one of the issue. The number of new cases has been almost flat. If you see the curve, the number of new cases are flat, whereas it has to taper down, then only we will see some positiveness emerging into the market. Similarly, number of deaths, if you see, gradually it has been coming down globally, but still a lot of time is there to taper down. If you see US, there also the daily new cases, it has been gradually coming down. So the curve has almost flattened and slightly tapering, and it is also one of the positive sign. But still number of cases are very high. Daily it has been still about 20,000, which means it may take another 2 to 3 weeks to gradually come down. But if you see the case of India, it has not yet peaked. In the last 1 week, the new cases are going up very drastically, which means it has to get peaked out, then the flatten will happen, then thereafter only a tapering will come down. So when compared to other countries and relatively, India has not yet tapered, not yet flattened, and it has to first get into peak zone, then it will flatten for a few more weeks, and then after only it will taper down. So for India, the pain is still ahead, and we may see some more pain ahead because of non-peak out of the number of cases. So the in the market, if you see, everyone has been expecting stimulus package. So stimulus package means government has to spend money, whereas if you see the financials of government, it has been very bad. The main source of the revenue for the government is the taxation. Since the economy is under lockout, almost 2 months of tax collection has been gone away, which means that government revenue has been affected badly. On the other side, if you see, means government expenditure hasn't come down. So the major expenditure, if you see, the majority of expenses for the government is the interest payments, pensions, salaries, which cannot be avoided. So what government can do in this time is, previously what government used to do is that they generally try to postpone the planned expenditure, which is nothing but the development expenditure due to budget shortage. The non-planned expenditure, which is like pension payment, salary payment, subsidy payment, that will keep on continuing it, and we hope that the government will continue like this only. So some of the development work may get postponed because of lack of funding, but market wants stimulus. So it may be difficult for the government. The only positive is that recently crude oil prices has come down, which can bridge a portion of tax collection on higher duties. Recently government has hiked the excise duty and crude oil prices by around 10% for 10 rupees for petrol and around 13 rupees for diesel. Because of very low crude oil prices, the tax collection can be go up because of higher duties, whereas the retail prices hasn't come down. Even though it is an decontrolled product, government has taken majority of the benefit. Recently some states also have hiked their VAT on petrol and diesel, which means that fuel price at the retail level is unlikely to come down in near future. Maybe if crude oil prices goes up, means then there is a possibility of fuel prices going up again. So only because of low crude oil prices, some tax collection may go up on fuel, whereas the overall tax collection is going to come down. If you see that even before the COVID, when the budget was announced, government planned for 7.8 lakh crore of debt in the current financial year. With tax collection lower and with disinvestment may be under question, it was expected that government has to go for higher borrowing, and yesterday they have announced that they have revised their borrowing from 7.8 lakh crore to 12 lakh crore. That means additionally they are going to borrow almost to 4.2 lakh crore just to keep the economy moving. So suppose if government has to go for stimulus, means they have to borrow more than 12 lakh crore. They need for normal functioning of economy, almost 12 lakh crore of borrowing is needed. So if they have to go for stimulus, means the government needs some money. So where they will go for additional money? If you go and borrow from the market additionally more than 12 lakh crores, means then it will crowd out private players, because entire money will be taken from the economy by the government and private players won't get any money. So lot of debate is happening between all economists on what is the source of money. Some say that government should pledge all the PSU company shares with RBI and should get money from RBI. Some say like that. Some say that the government should go for monetization. So everyone would have heard the word demonetization 3 years back, where RBI took out all the money. So what is meant by monetization, which is nothing but the reverse of demonetization, where government will borrow money from RBI directly and they will put it in the economy. That is called monetization. So right now, if government needs money, means what they will do is that they will issue government bond in the market, in the economy, and banks will subscribe it and they will get borrow from the banks. That's the normal procedure. But in these circumstances, when government goes for very high borrowing, abnormal borrowing, means when all the money gets sucked from the economy, means then private players won't get any liquidity from the banks. So in order to avoid that, if you go for abnormal borrowing, means government can monetize debt with RBI. That means government can sell their bonds directly to RBI. RBI will print money and give back to the government. So if government gets money from RBI, means they can spend it, but it comes as a cost. Any monetization means more liquidity into the economy, means it generally fuels inflation. So what government should do is that they should borrow from RBI and they should go for planned expenditure. And we are seeing in many TV channels that many state finance ministers are telling that government should transfer money like 5,000 to each family in India, so that they can spend it and can revive economy by consumption. But it is extremely dangerous, because in a country with huge population, if you give money freely to all of them, means then consumption will boost economy in the near term, but it will be highly inflationary, because the overall products available in the economy is same, whereas the money availability will be more, which means that more money chases the same goods, which is nothing but a typical case of an inflationary trend. And we have seen in many countries like Zimbabwe and all, where printing money has led to hyperinflation. So printing money for boosting consumption is very dangerous, and it should not be done like that. Instead, what they can do is that government can monetize debt from RBI, and they can spend it for planned expenditure, for building roads, for building infrastructure like that. So that will boost consumptions like cement, steel, and will also give employment to a lot of them, and it will revive economy gradually. It will be a slow process, but it will be a healthy one. If you see that Japan after World War II, when everyone wrote off their economy, actually that was the beginning of Japanese economy. Within 14 years from zero, Japanese economy went to second world largest economy at that time, mainly because of the industrial policies and government measures. Japan could be able to come out of that. So there is always a solution to the crisis, and we can turn the crisis into an opportunity. So the Japanese economy has done exceedingly well after World War II. When everyone wrote off the Japanese economy, they turned their crisis into opportunity, and within 14 years Japanese economy became the second world largest economy, mainly because of their manufacturing policies, and they made their manufacturing competitive in the world, and labor policies and all they changed, and they became very well after World War II. Similarly, India should use this as an opportunity. Right now we are hearing that many companies in China, MNC companies in China, they want to relocate to India, and India should use this opportunity and should make necessary reforms and bring those companies in India, and we should use this crisis as an opportunity. So in all this crisis, one stock which has been standing very tall is the Reliance Industries. We are seeing in US market that we are hearing on a daily basis that FANG stocks are doing well, and they are doing well for the last 3 years in US market. It has been listed in Nasdaq, and all the stocks are doing well. FANG stock is nothing but Facebook, Amazon, Apple, Netflix and Google. These are consumer oriented new technology stocks, and many of the investors are willingly buying these stocks, and they are doing exceedingly well. Even if you see in the recent downfall, when the market bounced back in US market, all these stocks has bounced back very strongly. So there has been a problem in India that these stocks were not available in Indian market, but one stock which could well emerge as a FANG stock of India is Reliance Industry. Their subsidiary Jio platform could well become an technology oriented consumer company, and as a first step, Facebook, which everyone knows that they have took 10% stake in the Jio platform for almost 5.7 billion. Apart from that, Silver Lake and Vista private equity firm, they also have took 1 and 2% respectively in the Jio platform. Today in newspaper we heard that Saudi Arabia Saudi Arabian government is also interested to take some stake in this Jio platform. So we are expecting that Jio platform could well become a technology oriented consumer company, where it will connect between consumers and businessmen. It will act as a bridge between consumer and an business, so that transactions could take place in Jio platform. So we all know that Jio is a telecom company, but everyone expects it is going to be well above that. So because of scarcity in Indian market, Reliance stock could well trade in premium, because of we don't have any other new generation technology stock in India. So someone who wants to participate in India could well buy Reliance Industries because of their subsidiary Jio platform. The stock is just 3% away from its all time high, whereas if you see Nifty, it is almost 25 to 30% away from all time high. So the Reliance has done exceedingly well, and it has outperformed in the recent downfall. In last AGM, Reliance chairman Mukesh Ambani told that the company wants to become a zero debt by March 2021. So in order to achieve that, they initially planned for stake sale to Saudi Aramco. That deal not yet finalized, but still it is going on. We can't write it off. It can happen in coming days. But before that, in order to reduce debt at the net level, Reliance has coming out with a rights issue. So the issue, the entitlement is at 1:15. So for every 15 shares of Reliance Industries, people are eligible for 1 share. The price is 1,257 rupees. So the entitlement ratio is not that much attractive. Price is also not that much attractive. But overall, we are expecting a good demand for this issue, because the company is going to raise 53,000 crores. So promoters are holding 50% stake in Reliance Industries. So they will subscribe around 27,000 crores in this rights issue, and balance by institutions, retail and mutual funds, they will have to subscribe. So it is one of the biggest issue in India. So till now we have seen only 10,000, 15,000 crores of maximum issue in India. So first time we are going to see a huge multi-billion dollar issue is coming in India, that is coming from in the form of rights issue. So the company wants to become a net debt free by March 21st. So we have to see that they are not going to become debt free, they want to become a net debt free. So Reliance is having around 3.2 lakh crores of debt, and around cash they are having 1.6 lakh crore of cash they are having. So still net debt is around 1.6 lakh crore. By right issue they are going to take around 50,000 crores. Because of Facebook and other Jio stake sale, another 70,000 crores they will get it. So in the meantime they need another 40,000 crores to become net debt free. And many of them are asking on one hand why Reliance is having so much cash of 1.6 lakh crore, on the other hand they are having 3.2 lakh crore of debt. They can reduce debt by repaying in the cash they are having. In many of the people are questions. I also don't have the answer for that question. In all this market downturn, two big deals are coming. Reliance rights issue, as I explained. The second deal which happened just 2 days back was the sale of HUL, Hindustan Unilever stake by GSK PLC company of UK. So when GSK Consumer got merged with Hindustan Unilever last month, GSK PLC got shares of HUL, around 5.5% stake they got it because of that merger. They sold 2 days back for around 27 crores worth of shares. They sold it 2 days back. It has been lapped up by foreign investors. Around 19,000 crores worth of shares has been bought by FIIs alone. Balanced by domestic institutions, it has been bought. And if you take Reliance rights issue and this GSK stake sale on HUL, almost 7 billion liquidity is to be sucked out for overall from the institutional investors mainly. So generally whenever these high offerings comes means the market will not perform well, because most of the money which is available in the market gets sucked into these two big deals, and the balance shares they won't get any money. So this and another deal also likely to come in Asian Paints, where Reliance is holding around 5% stake in Asian Paints. They bought it in January 2008. Around 500 crores they invested for 5% stake in Asian Paint. It is expected that Reliance, which they hold the shares in one of their subsidiary, they are planning to sell it in order to become zero debt. If they sell at current rate means they may realize around 7,500 crores to 8,000 crores they may realize from Asian Paints stake sale. It is expected that it may happen in coming days. We have to wait and see. So these big deals, what generally used to happen is that small companies may won't get liquidity, because most of the money will go into these big ticket items, and small companies will not get any liquidity from institutions. The another talk which has been happening for the last 2-3 weeks is the US-China Cold War. Already the World War has already started, where Trump has been accusing China for coronavirus pandemic, and Trump has been telling that China is the reason for the world sufferings from coronavirus. They hid a lot of messages which led to so much pandemic throughout the world on corona issue, and the trade deal which is likely to happen between US and China is likely to postpone, and Trump has been accused, Trump threatens that he may withdraw the trade deal between US and China, and not only this, many public also are very angry across many countries, European countries, US and other countries where the corona has been affected a lot. Many people are very angry against China, and Japan has told us some of their companies which are located in China to relocate to other countries, and government is willing to pay for that relocation, and like that there is a great talk going on that manufacturing base may shift from China to other countries. India will become an place to come in, but for that we have to give some necessary subsidies, and tax laws has to be made attractive. Already we have cut corporate tax, which will make India as one of the attractive destination for manufacturing, but still on labor laws and other things, India has to give some attractiveness so that many MNCs can come and keep plant in India. On unemployment, if you see in US, it is spiked to almost 15%. The data was released yesterday, and it spiked to almost near to 15%, and during the global crisis it went to 10%. It went. So now the recent spike is 15%, which is the highest we have seen during the Great Depression time. So this is the chart of Great Depression in US between 1930 and 40. It was there. At that time the unemployment went to 25% levels. From that it fell. So the recent unemployment is highest since this Great Depression level. Suppose if economy normalizes in the next 2-3 months means, then the unemployment will start coming down, and it all depends upon the future how things will pan out, and we have to see how this pandemic ends. The other big event which has happened in the last 1 month is the Franklin has wind up 6 debt schemes. So what is meant by winding up is that if generally mutual fund schemes are open-ended, that means you can purchase any time, you can make redemption any time. Suppose if they winds up means, then the open-ended scheme will become like an closed-ended, and you can't make repurchase, you can't make redemptions also. So why Franklin did like that was that because of they could not able to liquidate some of their holdings. A few months back Franklin side pocketed some of their investments, because Vodafone is one of them. So at that time itself they started getting lot of redemption pressure in some of the schemes. So generally when redemptions come means, what used to happen is that they will try to sell some of their investments. So initially all liquid investments they could able to sell it, and then after that they end up doing only low rated papers. When further redemption came, they could not able to sell that, which led to the winding up of the scheme. In one way, if you see, the winding up of scheme is good for the existing investors, because winding up is not done means, then all junk paper would have been left with the existing investors, which would have harmed more. So wind up of scheme is good for existing investors. So the 6th scheme is almost 30,000 crore rupees. So because after this news we are seeing lot of redemption pressure in credit risk funds. Last month, in the month of April also, there has been huge pressure in the credit risk funds. So, one of the reason why the problem is coming out is the asset liability mismatch. That is the core problem for the open-ended debt funds. So, in closed-ended debt funds, you do not have the asset liability mismatch, whereas in open-ended debt fund, what used to happen is that you can enter any time, you can exit any time. So, when there is a huge redemption pressure, mutual fund, what they used to do is that they try to liquidate some of their holdings. Suppose if they could not able to liquidate, means they will go to the next step of borrowing from the banks. As per SEBI norms, you can borrow up to maximum 20% of their corpus you can borrow, and you can meet redemption. Suppose if the redemption pressure is further coming up, means then it may be difficult to meet up the redemption. So, at that time only they will go for the extreme step of winding up, and Franklin has did that. So, the asset liability mismatch is the main issue for the closed-ended mutual fund, and what we have seen the last 2-3 years is that last so many years is that many corporates used to park excess liquidity in the corporate in the debt funds, mainly to get 2 or 3% higher return than the normal bank return, and liquidity also available. So, they generally used to park it. Now, after this Franklin fiasco, what they generally may try to do is that they will try to give extra money as a dividend or as a buyback to shareholders. They may try to avoid putting money into debt mutual funds, and this is the mutual fund debt category AUM. So, the overall mutual fund AUMs are around 25-26 lakhs crores are there. Among them, debt comes around 13 lakh crore, which is almost 50% of the overall mutual fund AUM. And if you see between September 2014 to September to August of 2018, debt mutual fund almost went up from 6.2 to nearly 13.5, almost double in 4 years. Between September 14 and August 18, the debt AUM almost doubled. So, during this time only this ILFS fiasco came. After that, if you see that there was lot of redemptions from the debt mutual fund, and mutual fund AUM started coming down, and in between we saw lot of issues like Yes Bank issues, then Vodafone issues, and now recently we got this Franklin issues. So, in the last 2 years almost there has been, we are seeing a stagnation in the AUM of debt mutual fund. So, the good ride between September 14 and August 2018 almost double the AUM, and from there now we are seeing some stagnation in the growth of debt AUM. And global markets return year to date, if you see, means US Nasdaq has done exceedingly well. It has come into positive territory year to date return. The other countries almost same what we have seen, just 1 or 2 percentage points difference is there between last meeting and this meeting. India still at the bottom of the curve, almost 23% down. We have done very badly when relative to other countries in terms of year to date return. FII flows, if you see the month of March, there has been a huge outflow, 8.3 billion outflow was there, whereas in April it was a minimum just $1 billion worth of outflow. In the current month May, if you see, means till date it has been slightly positive. After the Hindustan Unilever deal, maybe we could able to see around 3 to 4 billions of inflow in the current month. So, FII selling, which was mainly in the month of March, that has tapered off. Crude oil prices, it has come down very sharply. Brent crude, this is the chart of Brent crude from $60-65, it was few months back during the start of 2020. Now it is trading around $30. So, a sharp fall is there, mainly because of two reasons. One is that because of lockdown throughout the world, global demand has come down very sharply. That is one of the reason. The second reason is that there is no adequate space is there to store it. So, inventory levels are very high. So, lack of demand and no lack of adequate space is the reason for the very low crude oil prices. And this is the chart of Brent crude. But if you see the NYMEX crude, it went into negative territory. It went up to negative minus $44. This is the first time we are seeing it in the negative territory. So, the volatility, there is a huge volatility in crude oil. We expect the crude oil volatility will continue both on upside and downside. If you see in the last month, NYMEX crude oil May dated futures contract. NYMEX is nothing but the New York Mercantile Exchange, just like MCX. It is one of the commodity exchange where NYMEX crude oil used to trade it. So if you see the May dated futures contract, it turned into negative because many long positions they were forced to sell it. If you don't sell it means you have to take delivery. If you take delivery means there is no place to store it, to store that crude oil. They will give delivery only at a certain location in the US. So in that area there is no place to store the crude oil. So those who were holding long position, they were forcibly used to close it, and crude oil contract went to negative territory of almost $37–38. It went, and many traders have lost money because of the forced long position liquidation. So the main problem is the lack of available of storage space. Almost the entire storage space has been occupied, has been filled. If you take some of the companies like GE Shipping and all, which used to carry crude oil to transport it, the ships are lying idle. So they have given rent for storing the crude oil even before new order. See, generally ships used to carry crude oil only when they get order from one country to another country, but without order their ships has been used for as in storage space, and ships has been fully filled with crude oil, because this shows that there is no space available to store the crude oil. But what we feel is that crude oil will remain volatile on both sides. So right now what is happening is that crude oil production has come down. So in the second half of late second half of 2020, when economy starts opening up from lockdown, the crude oil demand is likely to go up, and production has come down sharply. In US almost the rig count has fell by 50%, and OPEC country also has reduced. So what we are expecting is that in the late second half we can see a sharp spike in crude oil prices. Temporarily it can go up to $50–60 also, it can go because of lack of production and some demand coming back in the world. So we have to prepare for crude oil prices to go up both sharply and upside as well as downside in the year 2020. So before closing up, I want to tell just an important thing. So globally, if you see, all countries are coming up with liquidity. All central banks are announced huge liquidity. US Fed has announced trillions of dollars of liquidity. Similarly, European Central Bank, they have announced, Japan has announced. So all this liquidity has to find some place to occupy it. So we have lot of asset classes. Gold is one of the asset class, equities are as one of the asset class, real estate is there. Now newly this cryptocurrencies like Bitcoin is there. So at some point of time, this huge wave of liquidity will find a place in some asset classes which is looking relatively better than others. So what we are feeling is that some bubble may form in any one of these asset classes. It may be gold, it could be some equities, not all equities, some select equities can do very well. It may be cryptocurrencies like Bitcoin, it may be some specific real estates or some specific commodities that can do well. So some bubble may be coming in these asset classes mainly because of huge liquidity available in the globally. Huge liquidity is available. So one has to be alert in the market. In spite of weak global economy, there is a very good possibility that some bubble may form in equities also. In select stocks it may be possible. So we have to be very alert and we have to keep our eyes open. Just by telling that economy is unlikely to come up in the next 1 year or 2 years, there won't be any opportunities. It is not going to be the case. We may get opportunities in coming days mainly because of huge liquidity available in the market. As you all know that any asset class stands on two things. One is based on fundamentals and second is on liquidity. So if liquidity support is there, even without fundamentals, the asset class will do well and the upside price can surprise everyone. And events to watch, coronavirus status we have to see, we have to closely watch India, because India, if you see that the cases are going up, the curve is not yet flattened. First it has to peak out, then it will take another 3-4 weeks to flatten, then only it will start tapering down. So India we have to watch it very closely. Then Q4 results are coming, unlikely to be good, and more than that the next quarter results will be most affected, because more than 1 month of production and sales has been affected. So Q4 results we have to see, what is the management commentary, we have to see it. Then FII activity, so FII selling has come down and some selective buying has been happening from FII side, and these three we have to watch it closely. And monsoon also will start from next month also, the status of monsoon arrival also we have to watch it. Thank you.